The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. I did part of Tom's show yesterday afternoon. I hope you guys enjoyed that. Did have some feedback though that said they're going to watch it on YouTube later at night because they feel they won't need melatonin anymore to go to sleep. So that was one of the pieces of the feedback that I got. All right, here we go. FOMC, let's talk about that. The forecast, the concept is they're going to leave rates unchanged because they're just awaiting policy decisions by Trump. But, Trump, you never know how the Twitter situation could heat up based on them doing something that he's been a fan of kind of the reflation situation. Rates are too low, the manipulation by the Fed. I mean, he's been hammering those guys. So, whatever they do, he could come out with a tweet that disturbs whatever they do, and then therefore the market's going to kind of react accordingly. So what do you do with the S&Ps? That's the final thought here. This was disturbing to me that we never got down to that 2256 area on the S&Ps. I'm showing it in the den right now. Hope everybody can hear me. Somebody said they can't hear me in the den. I think we're okay. It was disturbing that we rallied all the way back up on the close. I mean, Apple obviously had something to do with this, but now we're trading above the kind of pinched-in profile, which, God dang it. Ugh. I was hoping we'd go lower myself. So right now, I left a couple of puts on. I was a little concerned about getting short the underlying. Left some puts on. I didn't get quite down to that area to actually sell some premium. I was going to try to just turn it to a free trade. But there we go. That's what options are for, because you don't have to really get stopped out, and you can kind of got a little time here. I think 43 days left on the expiration, maybe 44, something like that. So we're trading 2279.50 right now, and here's the daily. Here's the 240s. Kind of weird that we have never really tried to put in a new profile on the 240s. That kind of gives me hope that we could get down and kind of get back down into that pinched in profile. But you got the FOMC meeting today, and it might be wise not to take any large positions right now. Just kind of trade the reaction instead of the action. That's the way I'm looking at it. Okay, I think everybody's got sound now. When did we miss sound at the beginning? Because I could repeat some of the gibberish that was coming out of my mouth early. I guess we're okay. All right, here we go. All right, so oil still looking launching paddish to me. Kind of came off some 52.32 areas yesterday. This is the weekly, bounced. I like this a lot as the long trade here. We talked about not getting too happy about trading the weekly inflection point down here, the 99, 96, 99. I think, what is that inflection point there on the weekly? 99.63. We kind of pierced it yesterday, pretty good, but we're sitting around, kind of hovering here. I'm not a big fan of being long the dollar right now. I think this kind of action gravitating back down in these weekly and fair lows, weekly close in this area is going to be pretty damning for the longs. So right now, I think it's a wait and see. Here's the daily on that dollar trade. All right. So I guess everybody's hearing me. The 10-year, I don't think you need to be taking any big positions on the 10-year here. This is the the daily situation, 124.05 now on the continuous on the 10-year. I just don't see a lot of edge. I mean, if you're going to trade this, I'd rather be long with some stops below 123.10, just kind of, hoping that we could rally back north up into that 125.08 and 126.32. I think that's where the edge is if you're looking at trading the 10-year. Take a look at the VIX. Nobody cares. Nobody's concerned at all. That's when things kind of come apart at the seams. Catches everybody by surprise. Not a lot of insurance is being bought right now. But I think you just got to wait until the FOMC minutes come out. Okay, let's take a look at gold. And we talked about a really cool trade yesterday afternoon with John from Philadelphia. I want to review that. It was Kansas City wheat and the CBO, or the Chicago wheat. Here's the situation on the April contract on gold. I don't like this as a short anymore. I actually think we can go higher now. I think there's a little bit of a fear factor going on in holding gold right now based on, I think Japan now is reacting to some Trump comments. There's global uneasiness causes people to buy gold. What can I say? Let's take a look at silver. We talked about this one too, the March contract, just to hit the usual suspects. Don't like shorting this either, even though we have climbed all the way up into that 1768. That was the targets on the long side. Just not exactly excited about shorting these metals right now. I was telling John from Philadelphia, I did buy some calls on beans here. I might get stung on them, but we're right down into the weekly on for lows here on soybeans. And by the way, from the elevator this morning, got my DuPont hat. Pioneer DuPont combo hat. Was it DuPont that had better living through chemicals? I took that to heart too much earlier. Oh yeah, it was Dow or DuPont. I can't remember. Anyway, so let's take a look at DuPont. Cool. Let's take a look at let's see if we can put in Kansas City here. Okay. Was that? No. We'll be right back, guys. And John from Philadelphia, could you type that symbol again on Kansas City wheat? Thanks very much. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Here's Kansas City wheat. Something that John from Philadelphia and myself were talking about yesterday afternoon on Tom's Hour. You've got kind of a dig-in area between 423 and 429. There's quite a bit of congestion that, in that area that I think you could, place some positions around on the long side. I like how this thing's set up. This could be something else you could trade with options. You could trade it in the sense of, kind of going long the instrument. And again, the regular wheat in CW. Somebody logged me off here. Hold on, guys. Get my currency server or the future server back up. Okay, so here's July wheat, kind of a similar chart action. And, there's a couple of different ways to trade this. If you're looking for a long-term move, you obviously don't want to get shaken out of it. And if you're looking for a kind of a sea change event, one of the things that you can do to just kind of, pay for some insurance, of course, is buy some puts. I mean, there's no harm in putting on an option strategy where you do have to kind of clear some hurdles. Your goal is a long-term move to kind of wring some money out of a trade. So that being said, one of the things that can happen here, instead of just going long the outright futures, is to look at it, debit spread on top with some calls. You can buy the future, buy some in-the-money puts to not pay a lot for the insurance and actually cover yourself very well on the downside if we continue to go down, and then that's just a wash. Pretty much tick for tick as the deltas go very close to 1 there. And another thing is just selling a credit spread on the bottom. So, and you can also kind of mix in a calendar situation there too. So a lot of different ways to look at this, but I think you're looking at this as a pretty big risk reward at this stage, and it's okay to kind of give away some of the short term to have that longer term move goal happen, but at the same time protect yourself. So I'm a big fan of doing things like that when you have a long term setup, and I really like some of the things that John was saying yesterday about that particular market. It doesn't have to happen. Hey, listen, anything can happen. You guys know that, but bracing yourself and paying up a little bit for the insurance for the greater good is not a bad thing sometimes. So S&P's moving up a little bit here. We're going to take a look at some stocks now that had some earnings related yesterday. Apple, obviously. Let's take a look at that one. So 126.75, that neighborhood looks like where we're at this morning. And on the grand scheme of things, on the weekly, we're way up here. So this is where we're at. We've talked about not being short this. I didn't go long this product, which is awful. But again, we talked about there was no indications to really go short the product. So just missing the boat, not a bad thing. No money lost. And now what do you do with it? So this morning, Apple doesn't have to be considered too high here to start stepping in front of it. There's really no way to go long on a gap up like this. So you're going to have to wait for new information. And that new information will happen in the scanner when it's appropriate. So that's the scene on Apple. AMD. Not getting that for some reason. ExxonMobil, let's take a look at that one. All right, so we had talked about ExxonMobil had pulled back into this area here. We were looking at it as a possible long the other day. That's kind of, basically off the table at this stage based on yesterday's action. You're gonna have to wait and see on that one. Wait for a reverse back above 85.12, or some new information to appear down below. Let's take a look at U.S. Steel. Actually, let's take a look at UPS first. All right, so looks like we're printing about 108.58. This is the deal on man, that is heck of a move there. Let's take a look at the daily here. Wow. Well, sometimes it feels better if you've been long a trade and they come out with earnings, you've stayed through it, and this type of scene happens. It feels good to get out of it, at least for a little while. If you've been long, I think we've got some technical damage here. Don't see a reason to stay in it at this point. It's not where you can kind of double up and kind of catch another inflection point. This one's off the table right now. And this is another good example of trading things through earnings. That Apple trade could have gone the other way if you were in that long. If you were long before it, that's great. I don't personally like to dive into things like Kramer before earnings. I've seen that guy just get people into the worst nightmare stuff and then walk away from it and never talk about it again. It's just incredible that he has he's got the entertainment factor for a lot of people, but it makes me sick. Anyway, I'd rather listen to Tom any day. 65.85 on VLO. Looks like we're printing that right now. Valero Energy, kind of just swimming around here. Nothing to really make any trades off of. Let's take a look at Pfizer, PFE. What? I don't know why we're not getting some stocks here. Must be having a problem with eSignal. Let's take a look at MasterCard. Well, I'll tell you what, while that fixes itself, we're going to go into the currencies because I can't seem to get some stocks to come up here. Interactive data must be having some issues. All right, so taking a look at the euro. Let's just take a look at the yen first. We talked about the back the truck up situation on the yen around 111.67.68. We got pretty close to that, and it bounced pretty good here. I see this as continuing to carry through. I think the yen easily could get up to 115.05 approximately that area. You've got a great chance to play defense below that 111, 67, 68 down here. We talked about waiting patiently until this happened on the yen. It happened, and I think we're going to be off to the races again for the devaluation of the yen. British pound. Dollar coming off hasn't really hurt a lot of these. Here's the weekly. This is pretty powerful. We may start seeing more legs up here on the pound and the euro, and that's why I'm a little concerned about trying to nibble on the dollar down here. It seems like the dollar's going to finally come off. We're going to talk about that a little bit more when we come back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Okay, so we're looking at the Euro British Pound cross. Here's the long term on it. Your initial targets down below are going to be 83.79. Looks kind of nice how we've reversed back into the weekly profile, retested it, rattled around here, and it looks like we're headed lower. Here's the daily situation. So those 83, what was it? What did I say? 83.79, that's going to be your targets here. on that particular currency cross. Let's take a look at the Australian dollar. You know, this is kind of what you want to see here. The U.S. dollar coming in hadn't really hurt this, but I think that the U.S. dollar, here's the daily here, got a little bit of resistance, but I like how we're spinning around above the weekly. Like a pop above 79.94, I think you just got to get into this trade, and I think this currency could at some point start taking off now. You've got some decent numbers coming out of China too. Here's the yuan trade. We never got down to the back the truck up scene here. God, I missed that. Getting into the neighborhood, it definitely popped. Let's go into let's go look at the CSI 300 again. Continues to just move up, really. Talked about not shorting against this 3396, 3400, just targets for that bounce off 3300, basically. Still like this to go higher. Should be taking some off though 3400s, but I actually think we're going to go higher here. Okay, some stocks that, okay, so what I do during the day, and these are dynamically updating real time. You know, yesterday when we were coming down, I think the S&Ps were trading on their lows. I was like, okay, what's not cooperating? What's hanging in there? Blah, blah, blah. Chipotle, I really think this thing could take a run up now. Kind of was breaking out again on the weekly this week. Here's the weekly. There's where we're at. I like this trade. Market could just not affect this too much. There's a couple other things that I was looking at. Coach, COH, as the market was coming in yesterday, that massive downdraft. Why are my stocks not coming up here? Let me go to this other server here. COH. Here we go. So we were having some pretty good moves up yesterday when the market was coming in, and looks like we're printing a little bit higher this morning. So here's where we're at on Coach. I actually think we can drift higher on this. It's kind of giving some early indications. Duke Energy, similar, right off the scanner. Let me see if that's in here. Yeah, all these daily. At the end of the day, these are going to stay static. So taking a look at these KMI. Here's the situation on KMI. There's the daily kind of bouncing off there yesterday. Here's the weekly. Got a really nice little situation on KMI on the long side. NASDAQ, that really had a decent pop this week. There's the daily. Here's the weekly. Clearing some profiles on the daily and the weekly. I like this trade to go higher. NDAQ. A couple of the stocks we were talking about. Let's take a look at Dollar General here. All right, so there's the weekly. Excuse me, there's the daily, there's the weekly. I like this. 72.80 playing defense below. Might have some more follow through on Dollar General. Celgene, obviously some of these drug stocks just relieved type situation. There's the daily. ABT. This is one I had up yesterday. It scared the pants off of me because I was looking at the S&Ps, and I always go back to the S&Ps, the bane of my existence, and look at the screen. I had ABT up, and I thought it was the S&Ps rallying, even though I was looking at the ABT chart. So that was a little scary until I realized what was going on. 41.29, got a chance to play defense below this. I like ABT. Here's not printing yet this morning, but it looks like we're going to move higher and have some follow through on some of these drug stocks. Microsoft, this was on the kind of the pullback. On the pullback uptrend support, custom sort in the scanner, 64.10. I think you got it. Okay, we've broken out. We've come back. retested. I think you got a nice little trade there on Microsoft on the long side. We're looking at longs right now. Let's take a look at this one, Under Armour. Achie mama. Ooh. Yeah, there's no reason, in my opinion, to try to catch this sword. Stay away from it. Just wait for some new information to appear. Then let somebody else figure out where the bottom is, really. I mean, let's take a look at KSS, Coles. This one, even though it's getting its head handed to it, I kind of like the action the past couple of days on this. Actually, are we printing up this morning? Yeah, we are, 39.97. So I like the action the past 2 days, kind of opening up low, closing on their highs, opening up low, closing on their highs. This might be a nice little pop up into 41.43 here, folks, just to kind of complete the cycle up to the top of this daily fair auction. I mean, this might be an interesting little trade, really. Maybe a 1.5 really easy on KSS. Let's take a look at Delta. Yeah, somebody send me an email about this one. I don't think this one's ripe yet. I mean, this let some more profiles appear here on the daily. You'll know when that starts to happen. Let's take a look at DHR. This was another one breaking out on the weekly and the daily. Looks like it's trading up again here. So here's the weekly. You got a chance to play stops below 82 here on this one. And these were ones that were kind of moving intraday north as the market was coming in yesterday. So kind of caught this. Okay, it's on the breakout situation on the scanner. The market's coming in heavily, as far as our version of heavily coming down, what the S&Ps are capable of doing these days. And some of these stocks were just moving north. These are the ones that was showing them breaking out. So interesting to see those. They were pretty easy. Just go right to them and cover your eyes and just hit the buy button on some of these. Uptrend support. We're going to take a look at a couple of these when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Looking at Goldman Sachs right now, quite a few stocks from the uptrend support area yesterday. Market was pulling back. Let me go back into that. There's that little sort. So Microsoft was in here. It's not in here right now, but it was in here on the close yesterday. Southwest Airlines, let's take a look at this one. Let's take a look at, there's that DHI trade that we were looking at earlier. There it is. Boom, 29.83. And I like this a lot because we had a profile up here below price action, plus we're coming to a weekly unfair high. So DHI might be a nice little pop trade to get a little bounce here off of some support. Yum Brands too, that, you know, not something you need to look at from the short side. This might have a nice little long launching pad situation on your hands here. All right, let's take a look at a couple other things. We were looking at stocks that were breaking down. Under Armour, obviously. ExxonMobil, obviously. Talked about that one. Goldman Sachs. Let's get back to Goldman Sachs. Here's Goldman Sachs. Let me pull up our e-signal charts here. GS. Okay. I will take care of that in the scanner. Somebody's saying it's still showing Feb gold. I will get that changed in the scanner. Let me write that down. When some contracts change, we sometimes miss that for a day or a half a day. So we'll get that taken care of. Goldman Sachs. Here's the weekly. You know, call a little trade and bounce there, but again, just like the dollar, you don't want to see these things reverse back immediately into these inflection points. Now we've had a little bit of a breakdown here. Trading it looks like 231 approximately this morning. So again, this one, we talked about trying to trade the strong of a strong sector, and Goldman Sachs started showing some cracks in the armor a little earlier here, and that was just as opposed to something like, come on, let me use this server here, as opposed to something like JP Morgan hanging in there a little bit, trading 85.46 this morning, so trading up. But this one, again, you know, providing a lot better strength situation on the banking side relative to what Goldman Sachs was doing. Bank of America, again, you know, nothing to look at really hardcore from the short side yet. We had AXP we were looking at. I've liked this one. I still like it. I love the chance to play defense here for this thing to go higher, not really wanting to come off highs here. Let's take a look at good old Tesla. Yeah, I mean, do not stand in the way of this thing. It can go higher. You've had some resistance around 256, but I don't even know if that's going to hold. Let's take a look at a couple other stocks. Amazon. Here's the weekly on Amazon. If you're going to trade this, we talked about 2 days ago, this will be some support on this 815 or some inflection points to pay attention to. We've had a profile edge higher here. Nothing to look at from the short side big time yet. Let's take a look at FAST. All right, so I kind of like this setup a lot too. We've broken out, we come back. This is this 49.31, got a nice little chance for a pop there. All right, a couple other stocks I had written down to take a look at. As soon as I talk about having Bed Bath & Beyond in your grandkids' portfolio as a long-term short, we get a little bit of a pop. So I think the ultimate place, I mean, I still think this thing has no chance whatsoever. A little bit of a move up yesterday, and kind of similar to Kohl's. We may actually move higher on this 41.34, but I'm not really concerned about the long-term viability of this short. 41.34 stops above that. Still, I think is not a risky situation. Let's take a look at Disney. A stock that's just been ultra strong long-term, had profiles appear below price action. You know what that means. And lo and behold, we've broken out on the dailies again. Nothing to look at from the short side. I can't seem to buy it up here, but it's not time to look at a technical breakdown here on Disney, of course. Let's take a look at Facebook. All right, so this might be a little bit delayed here, but let's just call it 132. It's very difficult to short this stock. And when you've got, we had some technical breakdowns before, but when you're coming into a support area on Facebook, a lot of times these will explore the whole fair auction just to kind of satisfy those conditions. Breaking out above 123.53, but what do you do with it now? We're trading about 132 pre-market. I think you've got to look at Facebook as something that it's difficult to short right now based on the weekly long-term view. And if you're going to look at it from the long side, you can orient some stops below 130.60 here. You got some initial targets, 133.14, but it's kind of like Joey was talking about. Some of these stocks you just kind of don't look at too often. They're investment grade type situations like Microsoft. We've been talking about forever since that thing broke out about at 53, and it gave you a lot of new chances to kind of add to it, actually. And that was one thing we were talking about on yesterday's show when I was doing that for Tom. John from Philadelphia brought out something really critical in kind of big trader thinking is that dollar cost averaging concept. It means doubling down. And we were talking about, adding to a winning position when it starts crossing certain barriers, just kind of step on the gas pedal. And that's kind of the same thing with Microsoft and probably Facebook, to be honest with you. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Taking a look at Home Depot, still really like this from the long side. I've been talking about that for a while. For a good while, actually. Eli Lilly. Two things here. I think just the calming of the unknowns with the Trump situation. It looks like we're trading 77 pre-market and some new drugs supposedly coming out. We could have some follow through on this on the upside. So not a bad situation to look at from the long. Let's take a look at a couple other stocks that are posting earnings here. See if I can pull up MasterCard. Yep. All right, so looks like we're printing. We're not printing yet this morning, but MasterCard, I think you've got a trading opportunity on 104.18. Let this thing drift a little lower if it can. That will be kind of a area to pick a battle there. Electronic Arts. Let's take a look at this one. Yeah, 82. Looks like we're printing this morning. So we're right on support here on Electronic Arts. I don't mind trying to pick this off here on the long side. Here's the long term on the weekly. Not a bad looking stock actually. And just giving you a chance to buy it, I think, at 82. take a look at Netflix. And we're going to take a look at Twitter, of course. 141.35 looks like we're printing here. There's zero reasons to short this. Zero. Be hard for me to buy it. Let's take a look at Twitter. All right, so here's the daily on Twitter. Starting to, break out actually on the daily, but let's take a look at the weekly. This is not technically a bad situation here. If we get a close on the weekly back in the fair auction on the weekly, that would be good. But I'd just rather wait and see if that happens. Then you can kind of use 17, 18 as a chance to play defense to go long. But I'm not super excited ever about buying Twitter, but that would be a pretty good stake in the ground for longs. Let's review a little bit. Let's take a look at the yen. I still think this thing can get some more legs to go higher up into 115 on the yen trade. Taking a look at the euro. Here's the weekly on the euro. I think we reached some initial targets on this. Let's just take a look at the daily. But there's those initial targets, that other side of the box right there, 108. We've reached it. We're kind of backing off here. Not a big fan of being long the euro ever, but I think the dollar could slide a little bit more here. So just beware that this thing can possibly move a little bit higher. Let's go back to our future screen here, and let's just do a little review. The S&Ps, man, it kind of is not the greatest thing in the world here. Looking at how this thing reacted yesterday afternoon, Apple's helping this, obviously. Got to sit tight on this one. Let me get the right time frame up here. On the daily, here's where we're at on the daily on the S&Ps. Guys, stay tuned for Larry. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.